Let's shift out of fear. Let's talk real strategy.
Something that people need to remember is, what is your purpose for buying a property and getting into real estate?
Don't try to time the market.
I don't think it's just about, is this the right time to buy it?
The buyer psychology has shifted from what it needs to be in the market right now.
There is genuine fear about what the economic outlook looks like.
But when it comes to housing, it's a basic necessity.
Real estate is meant to be a long-term illiquid asset.
Welcome back to another episode of the Stellar Talk Show, where we unlock the truth behind real estate, wealth, and winning in life, one honest conversation at a time. I'm your host, Stella Ram, and today's episode is all about abundance over fear and getting a home. That's right, not just any home, but the right one at the right time with the right strategy behind it. Because let's face it, housing isn't just a market trend, it's a basic human need. And in today's noisy world of headlines, trades, and interest rates, affordability fears, it's time we shift the narrative from scarcity to abundance. You deserve to own your piece of future, and this episode will help you move in that direction with clarity and confidence. To make this conversation even more powerful, I'm joined by our special guest, someone who truly gets it from both sides of the mortgage game. Please welcome Chris Bargis, a powerhouse in Canada's mortgage industry. Chris brings a rare blend of financial expertise and heart. Chris doesn't just find people mortgages. He builds strategies that save time, grow wealth, and full confidence. Whether you're a first-time home buyer, upgrading your space, or just trying to make sense of today's rates, Chris is here to break it all down for you. Housing is not just a market trend. It's a human necessity. Those who focus on strategy and mindset will come out stronger and more abundant. Let's shift out of fear. Let's talk real strategy. And most of all, let's get you home. Hi, Chris. Welcome to the show.
Thank you for having me, Stella.
It's a pleasure to have you, Chris. So as we were talking earlier as well about the market trends right now, especially for people who are still on the edge, what are your thoughts on that?
I think that when we look at why people, we have to look at why people are on the edge. There is a lot of fear out in the marketplace, and I don't think it's just about, is this the right time to buy? It's not a matter of speculation and timing. It's more, is it a good idea based on potential uncertainty regarding the economy and people's financial status? I mean, I've had customers reaching out to me concerned about their employment, their industry. The way that information trickles to me is through their renewals. People are reaching out a lot sooner. We don't have to go too deep on renewals, but there is genuine fear about what the economic outlook looks like. And as a result, buying property has almost been like a secondary thought. And I'm almost playing the role of economist sometimes now in these conversations, which is a little tough. But there is a lot of fear out in the marketplace for sure.
Yeah, the buyer psychology has shifted from what it needs to be in the market right now. What do you think the general public should be focusing on in today's market trends, and where do you think the success happens?
I think that something that people need to remember is, what is your purpose for buying a property and getting into real estate? Speculation should never be at the forefront of making an investment decision like that. At the end of the day, if you have a growing family, you're trying to get into a certain neighborhood, you're planning on, you need a place to live. You're a new immigrant to Canada, because even though an objective of the government is to reduce and pull back on immigration, the reality is the amount of people emigrating is not keeping pace with those that are still entering and gaining their PR status, and those people need a place to live. So if you are one of those people or a family, at the end of the day, real estate is meant to be a long-term illiquid asset. Your holding period should always be at least 5 to 10 years. This isn't something that you get rid of in a year or two. So if you think about it like a stock, that's where the fear comes in. If you think about it as, this is a long-term investment for myself, my family, this is potentially a retirement strategy, that there's arguments that can honestly help that fear dissipate, because it's a tried and true measure of building wealth, and that's how people have to look at it. I'm not going to panic sell this thing. This is something that I'm going to hold. Exactly.
So as I was telling many people that I talk to as well, when it comes to housing, it's a basic necessity. Like no matter where you are in your stage, like if you're new to the country or like you're currently renting, you're thinking at that next stage. End of the day, you need a place to call home that you can come in, which is affordable, which gives you the stability and security. So most definitely, if you're thinking about buying a house in the financial ends of it only, then of course the fear factor comes in. But as you mentioned, looking long term and having a good strategy towards that end goal, that definitely gives more empowerment towards making that decision, no matter what time that you are in the market.
Absolutely, and to touch on the strategy piece, the one thing we always try to instill in people is be proactive about this process. You know, we do have a lot of people coming to us sort of, I wouldn't say spur of the moment, but they're saying, I want to buy a house, what do I do?
Yeah.
I want to buy within the next 6 months. And sometimes even that's not quite enough planning, because the biggest piece is, first of all, saving the down payment. I mean, over the past few years, especially in 2021, 2022, when we saw that unusual spike, it was a very abnormal bubble, almost type market.
Yes.
We've seen the biggest transition of wealth from the boomer generation downward. So people are coming up with money and resources, the means to actually get into property. But then there's the financial aspect. As long as you hone in on what your affordability truly looks like, and don't just think about your housing costs, think about everything that you spend money on in your life.
Yes.
You know, you don't want to be eating craft dinner for a year. You know, if you like to travel, you like to go out for dinners, you're saving for your children's future through, you know, RASPs, you're expecting tuition payments to come up depending on how old your kids are, right? Daycare costs, anything. Think about your finances holistically and include your housing costs in there. And that's one thing that we do, is we help people budget their lives and incorporate their real estate around that. You just people need to become more financially literate, which again, that's something that we assist in. And as long as you assess your own risk tolerance and you clearly have parameters that you've set out for yourself, you don't really have anything to worry about from a financial perspective.
Absolutely correct. Yeah, that's how, like, the people who are winning in today's market, that's the strategies and the mindset that they thrive on.
Exactly.
So, absolutely right. So, Chris, I'm going to also ask you, so behind mortgage rates, the trades that's going on right now, and with the recent election announcement and everything, approvals and affordability of mortgage, what are the highlights there in your opinion at this time in the market?
Well, affordability is, I mean, one thing that we learned was that the stress test was actually a very pragmatic measure, because when we were all complaining about how we saw rates at 1% to 2% back in 2021, and the federal government, or I should say the Bank of Canada required, or we were required to use this benchmark rate of 5.25% for the last few years. Well, people today who are paying 4.5% and sometimes 5%, they've been able to withstand the financial impact of those higher mortgage payments as a result of this stress test. So affordability hasn't really changed. Default rates have not increased. Like, the Canadians have been very resilient, which is a very good thing. It shows that the government did make some good decisions. One thing I would say about just housing in general is it's interesting to see what the next few months are going to hold, even the next 12 months, I would say, because there's a lot of uncertainty still, even post-election. I would say that we call him the orange guy down south. I could talk at great length about that. But the U.S. we are very tightly connected to what happens in the U.S. And because we're still uncertain about what's going to happen with tariffs and global trade, specifically between Canada and the U.S., that is still of concern. I would say rates right now, they did see a very short-term spike, but following the Canadian election, we actually saw bond yields, we've been seeing them steadily drop a little bit over the past couple of days. That could translate to a slight decrease in fixed rates, because lenders now have a little bit more profit margin to work with. But really, it's this zigzagging pattern that we're seeing. It's not a guarantee that rates are going to come down significantly in any way by the end of the year. There's still a lot that can happen. And we're waiting to see what happens out of the U.S. But now that our election is done, that's one sort of modicum of uncertainty that is behind us. Depending on whether you are a liberal, a conservative, an NDP, or whatever, it'll be interesting to see what the current government that we've had for the past 3 terms is going to do. But again, I'd say it's a big question mark for rates between now and the end of the year. There are economists still predicting that the Bank of Canada is going to cut by up to half a point. There are those that are uncertain as to whether or not that will happen.
Yeah, no, that's true. That's true. And those are the interesting the roller coasters that we've been traveling, in the near past, right?
That's for sure.
Yeah. So this is why when I talk to my prospecting clients, I tell them don't try to time the market. Focus on the time that you have in the market, right? As long as that you have the savings that will get you through to your down payment, and you have a strategy, a plan, and you're able to afford your mortgage payment after you speak to the experts like yourself, then make the decision that is right for you and your family. Because what we have seen in history is no matter what the country has gone through, inflation, economic crashes and things like that, housing still stays at a very strong, stable way of investment because, as I mentioned before, it's a basic need. Everybody needs a house. And population keeps growing. Immigration keeps happening. So no matter what happens, that's the basic need that we all have to pay attention to.
Absolutely. No, you hit it on the head, which is focus on your time in the market. And that goes back to what we touched on at the beginning, which was real estate is meant to be a long-term liquid asset. When you think 5 to 10 years out, no one thinks about their stock portfolio as 5 to 10 years. The trend line, even in the equity markets, Stella, is technically up. It's a zigzagging pattern, but it is generally up. And the same thing is true for real estate. As long as you have to think about what your holding period is, and as long as it is for the long term, you really don't have to worry about short-term market fluctuations. At the end of the day, real estate is a tangible asset. That's the thing. It's not a piece of paper that you're trading. It's a place that you live.
Yes.
You can spend money to improve it. You can add hard value to it. There's so many things you can do.
Exactly.
And I think that's what people need to remember, as you stated, when you're making a decision whether or not getting into the market is right for you. What are your long-term objectives?
Exactly. And it's an asset that you hold.
Exactly.
Whatever throws at you, you have that extra boost. You say, okay, now I have this asset that I can play with. You don't have to worry too much, if the uncertain thing happens in life, right?
Exactly.
So that's what I like about investing in real estate. I want to ask you, Chris, winning financial strategies and winning mindset strategies in today's real estate market, what have you seen? What's your advice and what do you see out there as to the winners that's following at this time?
Well, one, for starters, just to echo what I had said before, was being proactive and planning as far as you possibly can. Maybe not 2 years, that's excessive.
Yeah.
But if you're planning on getting into the marketplace within, the next 12 months, let's say, or it's a decision that you're thinking about, talk to your bank, a mortgage professional, whoever it is, get a financial wellness check. The other thing is understanding, as we also touched on, your household finances, where all of your money goes, and assessing, okay, are there places where you can you maybe scale back where you're spending money, and that could help you accelerate your savings towards a potential down payment. The one thing, I would say, I want to share a lack of winning strategy, which is the whole concept of waiting but not knowing why you're waiting.
Yes.
That's something that cause a lot of people to lose out on, because at the end of the day, regardless of short-term fluctuations up or down, the market moves at a pace that exceeds the rate a person or household will be able to save money. Inflation and the increase in living costs are living proof of that. When you go to the grocery store prices are absolutely insane. The tariffs are not going to help with various products. So don't think you can outpace savings-wise, don't think you can outsave or outpace the rate at which real estate moves. Understand, how much are you saving every month? What do you qualify for today? If it's not what you need, how much income are you missing? How much in savings are you missing for your down payment? What is that X factor? What's it going to take to get you to your goal? And build a roadmap. That's the winning strategy, is building a roadmap or having the assistance of somebody to help you build a roadmap.
Yes.
Instead of leaving things to chance, assuming that maybe not today, but maybe a year or two from now, I'll be able to buy a home. Don't pray and hope, throw your hopes to the wind, because I can tell you it won't work.
Yeah, and this is why it's important to talk to the experts to get the advice when you can. And, a lot of the times, when you go for public gatherings or even for your family gatherings, what you hear is, I wish I did this 2 years ago.
Oh, so many times.
Yeah, exactly, right? So don't be that person who would start the conversation like that. Be proactive. Take the step. right? Talk to the people who can guide you in the proper way. I want to share something with you as well, Chris. Like, when I'm talking to my clients, my friends, when they tell me, Stella, I don't have that income mark, but I do have the savings, or I'm almost there in my savings to take my next step. Being creative around your strategies really helps in today's market, especially because, hey, if you don't have that income, if you're shying about, let's say monthly about $2,000, $3,000, let's say $2,000, you can always look into a home which will also give you an income with a rental suite.
Absolutely.
Yeah, so a lot of the people, they don't think in that strategical way, but when they do, and when they see the potential that they have, they don't see that until you sit down with someone who can break it down on paper for you.
Absolutely. And I'm glad that you brought that up, because it's happened to a very recent customer of ours, right? Like, we had somebody who's looking in the Golden Horseshoe, and they were limited by their down payment. They had about $38,000 saved. He had his parents he was a young man in his early 20s. He had his parents as co-signers who were self-employed. It was really tough to make that work. So we gave him options and said, look, if you don't have the 20% down payment, what you do have the option of is a different asset class. Have you talked to friends? You can co-invest with people. I've seen people do joint ventures. We've helped them through joint ventures or straight up co-buying together. Sometimes you can even rent a room if you're comfortable with the people in your immediate area. You get some rental recapture that way. There's other ways to help offset the hard living costs, like the housing costs, to make it affordable to get into the market. Basement suites are a big component to that. But the other thing is, down payment is where the discussion always starts for us, right? You can have as much income as you want. You can make $300,000 a year, but if you have $10,000 saved, you'll probably save faster than most other people do, but you can't do anything with $10,000, right? That's the first thing. So your savings are number one. If you have a down payment, that's where the conversation sometimes becomes workable, because now we can explore things like co-signers, co-borrowers. Family might be willing to help. Maybe they don't have the means to financially support you, but if you have the savings and they have the income, maybe they're retired, they're mortgage free, even if they have a small mortgage, even retirement income can help you qualify for a loan. So we never tell people, don't start with a defeatist attitude and say, oh, I only have this much saved, I can't do it. Get an assessment, because you don't know what's possible until you talk to a professional. Exactly.
I want to share, so at StellaProperties.ca, this is exactly the conversations we have with our clients. And that's why we came to a plan or a strategy to offer our clients. It's like, hey, if you've been saving up, because especially right now is a very good buyer's market. Anybody who has been in the edge, looking for that perfect moment, if you're financially able to and you're able to afford it, this is the market you should be getting in. As Sandy Mackey said in one of our previous episodes as well, 2025 is the year that you make it or break it, right?
It is.
Yeah, it is. It is one of those years that doesn't happen all the time. I know there's a lot of intense news or headlines talking about trades, interest rates, and things like that. But when you have a strategic plan, and as you mentioned, down payment as a starter, then you can plan something with the support of the experts. So that's why we actually took the initiative of supporting them by giving back 1% of our earned commission towards the down payment.
That's amazing.
Yes, absolutely, and with no catch.
That is incredible. And you know what, just to add to that, there actually are cashback programs on the lending side. So we've seen this with insured mortgages. So that is very generous of you, and I think that's a huge help to your clientele. There are some people actually think, okay, I've saved a certain amount of money, but what if I have debts? What if I have a student loan? What if I have a car loan? I need a car, unfortunately, there's nothing I can do. There are even cashback programs where you might pay a little bit more on the interest rate, but the lender can go anywhere from 2 to 3 to even 4% of the mortgage amount in cashback. And that conversely can be used for anything except down payment. You can pay out debts. You can apply it towards your land transfer tax, your closing costs. So now the money you've actually saved can go towards just the down payment, because that's the one thing that you can't change. The government allows up to 5% minimum down payment, 5% on the first $500,000, and then it's 10% on the excess purchase price over and above that. So really, if you're someone who has really pinched their pennies together and tried to save, you want as much of those dollars going towards the down payment itself as possible.
Yes.
And there's obviously incentives like what you offer your clients and what lenders do here to try and help you take care of the rest if those are blockades.
Yeah. Having those conversations, that's the key starter, right?
Yeah,
because if you don't have those conversations, you're not going to learn about these strategies that is available and incentives available, and it's just going to be on that side waiting till the change that you're waiting for.
Absolutely, and I don't mean to sound corny, but knowledge really is power.
Yes.
A lot of people just don't have the knowledge, because I can tell you, even as a mortgage professional, learning all the intricacies of all these programs that change on a regular basis, by the way.
Exactly.
Having that person who just eats, lives, sleeps, breathes this stuff, just have the conversation anyway. It's not going to cost you anything. It's like a 15-minute call. You might leave learning information and say, okay, maybe my time isn't now, but maybe it's a lot sooner than I thought it might be. Right?
And having a plan to get to where you want to be. That's the mindset that you should be having.
Exactly.
Most definitely. I want to ask also, I have said this multiple times, but real estate has been one of the biggest wealth building tools throughout history, and there's a reason behind that. As I mentioned, because everybody needs a home, it's stable. Nobody can steal it from you. It's not like buying gold. Buying gold is a great investment. I buy gold myself. I invested in it, but I like investing in real estate more because it's an asset that you can actually see and hold, right?
Well, if you buy gold bars, you can certainly
you can.
asset too.
But real estate is a different ballgame.
It is.
No, if you give me gold and real estate, I'll go real estate first.
You can sleep at night with your gold bar, but you can't really do much else with it.
Exactly. So I want to ask you, in your opinion, based on what you have seen, Chris, why it is what it is? Why is real estate one of the biggest wealth building tools?
Well, think about, if you've I've had investor clients, people who I've seen build their portfolio over the years. These are the people who have the desire to go beyond just the primary residence, like their house for their family. These are people who have had a goal and said, when I am done working, I want to be able to generate passive income and not worry about my family. I want to be able to travel. I want to maintain my lifestyle, or at least live whatever lifestyle I want to enjoy past the age of 65 or whenever as you retire. I have seen people at scale, property portfolios of, let's say, 10, 12 properties. And that's actually, I'd say that's a considerably large amount of properties to own. Sometimes it gets very strenuous to manage, which is why property management companies exist. But people who are borderline mortgage free and have duplexes, triplexes, apartment buildings, and are generating passive income, you have to do nothing for this income, in sums of $200,000 to $300,000 a year. Imagine that you don't have to work and you're earning $200,000 to $300,000 a year, and you just have to check in on tenants every so often and either manage buildings or pay someone to manage your buildings. There isn't anything like that. I mean, you'd have to put a sizable amount of cash in a GIC, paying you, your 3% or whatever it is at that future point in time, and that rate of return changes. Just to get anything close to that, and you never will. You never will, because life throws all kinds of things at us, and the amount of cash you plan to have aside isn't always, it doesn't always work out that way.
The case,
Real estate's always there. Rents go up and down, but at the end of the day, there hasn't really been an asset class that has been able to subsidize people's retirement quite like real estate has.
Exactly. I remember my grandfather used to say, when I was very young, he was very into buying land. And one time I was asking, why land? There's nothing on it. They don't make it anymore. So
they don't. It's a scarce resource. The only thing, there's supply and demand, which changes the value of real estate. But as we know it, that is the structure on the land. Land actually does not depreciate. It does not. Land is one of the few things in that space where it will always go up in value. Always.
Exactly.
Because there's less of it.
Exactly. So, this conversation is very valuable, Chris, because you're touching on topics that needs to be heard. Because, not in our day-to-day life, we don't hear this all the time, unless otherwise we tune into a topic like this, right? So thank you very much for sharing that with me. I want to ask you, what are some of accountable steps someone, it could be someone who's very young, thinking about his future, or someone in their mid-age, now thinking about building a family, or someone retiring and thinking about next steps as to how they want to retire, and how to plan the future. what are some accountable steps they can take at this time in this market to secure that and have a winning mindset and win the game?
Well, you hit on a few different demographics, and I would say that the strategies or the steps are a little bit different for each person, depending on where you are in your journey. But we can start with, if you're someone who is very young, maybe you're in your 20s, and you know that you want to start creating that passive wealth strategy at some point for yourself in the future. The goal is climb the property ladder, getting into your first property, which we've touched on throughout our session today, which is speak to somebody, figure out how much you're able to save each month, look at areas where you can cut back a little bit. You know, you're spending, maybe you don't go out drinking as often in the week, or maybe cut back on the expensive dinners or whatever it is, whatever you spend your money on, vacations, and focus on saving. If you're at the very start of your career, you're only going to make more income with the passage of time. It doesn't hurt to have an initial conversation with your banker or mortgage professional. Whether or not you're ready, consider speaking to family. Like, figure out where you are today. And if you have family members that would, like we said, help co-sign, even potentially financially support you, until you're willing to have those discussions within your own household, you don't know what people will say yes to. Like, I've had young customers that have said, Chris, we think we're at the stages of being ready to buy a house. They have a conversation with their parents and they say, oh, well, we never told you this, but we set aside $100,000 that, you know, whatever sum it is, that we were prepared to gift you when you were ready. Show that you're serious. If you're serious about your journey, start the discussions with a mortgage professional, start it with your real estate professional, start it with your family, and watch what kind of plan can actually come together. For those who are later in their journey, who maybe own the one property, maybe they've built up a lot of equity, they're either thinking about retiring or, you know, they're at that stage where maybe they've got kids, they're starting to get older, they want to create some sort of retirement plan, not just for themselves, but find a way to get assets that they can pass on to their kids. You'd be amazed at how far the equity in your home can go. We teach people how to use leverage without overexerting themselves, overextending themselves, how they can use leverage in properties that they've owned for years to either buy more properties that they can turn into income properties and eventually pass those on to their kids. Maybe when your kids go to university or college or wherever, it's a place they can live in for a period of time, right? My parents did that for me, and that's where I learned, you know, my strategies as well. Have a conversation, though. You would be amazed at what you can do with the equity in your home.
Amazing. And when it comes to retirement, like, what are some of the strategies that you will advise at this time? Anybody looking to downsize or, like, you know, take the use of equity that they have built, you know, working so hard all these years?
Yeah, absolutely. So there's honestly a whole array of strategies. One thing we've seen is, of course, that the natural first thought that comes to mind is, oh, if I'm downsizing, I'm going to sell my house. I'm going to hopefully be mortgage free or have a very small mortgage, right? On the next property, that's obviously one way that you can go about funding your retirement. The other that we've seen is, if somebody, depending on what your income is in retirement, you know, civil servants, public service workers tend to have very good pensions, right? They can rely on that. What we've seen some folks do is try to hold on to their property, perhaps refinance it, get a smaller mortgage. Depends on how much less you're buying for than what you currently own. Buying that property in cash, turning their larger house that they're moving out of into an income property, maybe a young or new family that wants to move in. As long as that property can carry itself, you now have two homes, which one or both of you can pass on to your kids, your grandkids in retirement. We've done that for a lot of people, right? There's a lot that is available to people thinking about retirement. It's it's a discussion.
Amazing. That's very valuable information that you share, Chris. Like, you know, you're actually giving that the important points, but you're giving that with your daily experience as well, which is bringing more value to the conversation. So before we end it, I want to get some quick tips from you. So for anybody who's looking for a mortgage today, where do they need to start, and what are their focuses should be on?
There's three main areas that we look at and banks look at when they're qualifying you. So the three things are income, down payment, credit. Down payment, I say assets, but assets is kind of part of down payment. So one thing I would say is, this has been the theme throughout our entire session together, which I love, because people can't hear this enough. Just start the conversation. Go to your bank, go to a mortgage professional, whoever it is that you trust. Ideally, get a referral from someone within your friend network, whoever that you can trust. who you know does a good job, and find out where you are at today. Figure out and build that roadmap. Figure out if you're not ready today, what you need to do to get to your goal within 6 months, 12 months, or however long it is. You don't know what you don't know, right? You need to know where your baseline is. That's honestly the first thing that I would do. Mortgage rates, that's the first thing that people often ask about. Rates are they're going to change. They're going to go up and down. You renegotiate your mortgage contract every 1 to 5 years. That really is less important. The stress test is not necessarily going away anytime soon. It's shown that it's actually helped Canadians stay resilient. But again, find out where you're at today with all these rules, which might be subject to change, in the coming months or years. Just get a wellness check. It costs you nothing. It's going to take you, maybe in total from start to finish, like 1 or 2 hours of your time. And there's lots of people like myself, other mortgage professionals, bankers who are willing to help you, right? That's where you should start.
And if you don't mind me adding this to that is if you are thinking about having that conversation with an expert like Chris, don't make any major purchases. First have the conversation before you make that purchase, because that really helps too.
Yes, don't go buy a car. God, I can't tell you how many, at least sometimes we have people ask us, I'm thinking about purchasing a vehicle, or I'm thinking about taking out a loan. Is this a good idea? So the short version is, credit is one of the most important categories. Your income is less controllable unless you're switching jobs, right? Now that we're hitting on specific categories, down payment, you need to focus on your saving. Credit, protect your credit. Don't go co-signing any loans for people or family if you're thinking about getting into the market. Don't go get a vehicle if you can avoid it. If you have a vehicle but you're approaching the end of your lease term or your financing term and you're going to own the vehicle outright, that's a positive thing. Talk to a mortgage professional about what the impact of payments would be before you go and buy or lease another one. But yes, being prepared is absolutely key when it comes to credit.
That's amazing. Thanks for sharing that. Chris, so the last question before I let you go today. I know a lot of people, we've been seeing this since last year or so. Everybody is focused on interest rates, and we've seen it coming down. And now with last announcement, we saw it stayed where it is. And Bank of Canada is playing with the numbers, and it kind of the psychology everybody is trending towards. But I want to ask you, with what interest rates are heading, does it really matter when it comes to a person's psychology or mindset towards what they want to achieve in their goals? Because there are things that we can control and things that we can't control. So interest rate is something that we can't control. So thriving in that space is not going to take us anywhere. So I would like to focus on places where I can thrive, where I can control. So just saying that, what are your advice to anybody listening today as to where their focus should be, and what they should be focusing and thriving on to have that winning mindset, no matter it's buying a home or purchasing a car or whatever that is in their schedule, but where they should be focusing and working towards.
I love that you said, you started this question with things you can't control and not worrying about that, because you're absolutely right. Rates are not something that we can control. In terms of what I think will happen, I still think that the Bank of Canada is going to make some cuts, because at the end of the day, they're focused on two things, 2% inflation and low unemployment. Right now, unemployment is high, and if that doesn't change, then they're going to start influencing interest rates to reduce the cost of borrowing, because they don't want us to get into a recession. And to keep GDP somewhat afloat and production happening, people need to borrow and invest, and they're going to do so when rates are cheap, right? But as far as what they should focus on, you mentioned this a number of times, which is the need for housing. If you know that you are going to need to make a move at some point, you know that it is within your financial goals at some point to get into the housing market. You're just still asking yourself when. Take the rate part out of the when. Because again, your mortgage contract comes up for renewal. You renegotiate that every so often. Just figure out, okay, what would a quarter point, a half a point, a full percentage point change in rates do to my finances? What would that do to my housing costs? And that's really only applicable if you have a variable rate mortgage, right? Or if you're going to get one. The reality is, rates come down, more people will borrow, housing prices go up because demand goes up. If rates go up, less people borrow,
Yeah.
housing prices come down to encourage activity in the market. So there really is no, speculators always lose.
Yeah.
I would say, again, if it is a goal of yours within the next 12 months or it's something you're seriously thinking about, get your financial wellness check, stop worrying about rates, focus on where the opportunities are. You want to be active in a market when others aren't active. I've heard this saying so many times, and it's Warren Buffett coined it.
Yeah.
Be fearful when others are greedy, and be greedy when others are fearful. When you see fewer people competing for properties, that's when you find deals. And you only pay the price for the asset once.
Yes.
That's what determines what your overall return on investment is by the time, years and years later, that you come ready to sell it. That's what determines what your profit is.
Yes.
Get the lowest price possible for a property, and that's honestly when rates are highest. That's when you are going to pay the least amount for a condo or a house.
Exactly.
Right?
Exactly.
So you should be thinking, in this market, what can I do to make that move or to get in now that others aren't really paying much attention?
Exactly. That's wonderful. And just talking to like one of the investors in the recent past, what they said is, Stella, like when you're buying, like if you're buying a home in the intention of making money and making wealth, you make most of the money not when you sell, but when you buy, because the price point that you secure the home is very important in that wealth building.
Absolutely.
Yeah, because interest rates can fluctuate anytime. But if you have a very good price point that you're securing your home in or your investment property in, that's going to make you the most money based on your strategy that you're going to follow through that to get the cash back out of it.
Absolutely. Your interest is a cost in the overall, when you're looking at your return on investment, but appreciation is where it's at.
Exactly.
And we have this discussion too, Stella, when people are, there's people who are very hyper focused on cash flow and people who are hyper focused on appreciation. You need a little bit of both if you're buying an investment property, but at the end of the day, appreciation is where it's at, because that people who focus more there are buying in markets like Toronto, like Vancouver, right? The cities or larger metropolitans, suburban areas where there's infrastructure being built. Look at what the future plans of the area are. Yeah. That's where your greatest upside is going to be. And I've learned this not just from investor clients that we've helped, but like I even look at my parents, right? They've built a nice portfolio for themselves. Yeah. No mortgages. Like imagine that you have a property that's worth north of $1 million one day and you have no mortgage on it. Like eventually you'll get there.
Yes.
You'll get there. 25 to 30 years to be exact, because that's what the amortization periods are.
And that goes so fast these days. The years just fly by.
It does. And you know what? Like you look at, if you plan your finances properly, and this is part of the financial checkup, the discussion that you should have, if you can afford in excess, which you should, of what your housing costs are, you can even put a little bit more towards the mortgage. This is why interest rates, it's important to try not to focus too much on that, because I get people saying, Chris, if I go 30 years and I'm paying 4.5% versus, I can get a rate that's 0.1% less and do 25 years, is that not better? Well, the reality is if you pay a slightly higher rate at 30 years and you have a lower payment, what's to stop you from paying a little extra towards the mortgage every month? Or at the end of every year, you dump in a lump sum. If you're someone who earns bonuses or overtime or commission, whatever it is, that's how you actually reduce the amount of interest payable, because the interest is calculated based on what your outstanding mortgage is every single month.
Exactly.
The rate is just a function of the amount of interest you pay in dollars is a function of how long you owe that money to the lender.
Yes.
So if you pay it off faster, you pay less interest.
Exactly.
That's how it works.
Exactly.
So don't think about that as much in terms of, is it good to get into the market? Focus on, is there competition for real estate? What is that like? What price am I paying for the asset today versus what I might end up paying later on if the market goes up, which it will, right? It always happens. Focus on where the opportunity lies and where the deals are, not what interest rates are doing as much.
Exactly. Focus on things that you can control.
Exactly.
Yes. Yeah, the winning mindset. So if you're someone who's looking out for that winning strategy and how you can get started, I'm going to leave our information in our bio today. You can reach out to us at stellaproperties.ca or to Chris directly, and we'll be happy to sit down and have a no obligation conversation with you so you can make the right decision for yourself and your future. Thank you, Chris.
Thank you for having me, Stella.
Yeah,
I appreciate it.
And that brings us to the end of today's episode at Stellar Talk Show, where we talked about more than just rates and market trends. We talked about mindset, mission, and the real meaning of home. A huge thank you to our special guest, Chris Bargis, for sharing so much wisdom on what it really takes to navigate today's real estate market with clarity and confidence. From understanding buyer psychology to breaking down the mortgage truths, Chris reminded us that with the right strategy, even a volatile market can be a launch pad for the next big move. Here's what I want to leave you with. Housing is not just a trend, it's a basic human need. It's about stability, security, growth, and building a legacy. We know the headlines can feel heavy, but let's be honest, fear has never built a home. Strategy has, support has, and mindset absolutely has. So instead of waiting for the perfect time, let's create it. Get educated, get empowered, and remember, you don't have to do it alone. Our team at stellarproperties.ca is here with the tools, programs, yes, up to $20,000 towards your down payment, and step-by-step guidance to help you make your move. Because you deserve more than uncertainty. You deserve a plan. You deserve progress. And most of all, let's get you home. Until next time, I'm Stella Ram. Stay inspired, stay intentional, and keep building the life you were meant to live. Let's get you home. Thank you for spending your time with us on the Stellar Talk Show. We hope you found value in today's episode and gained insights to help elevate your lifestyle. If you enjoyed the discussion, please like, subscribe, and share it with anyone who could benefit. It means the world to us. Until our next episode, stay inspired, and I'll see you soon on our next Stellar Talk Show.